failed to trade below the critical support zone at 1710, 1715 last week, and precisely with that as support we have seen a good rise. That was the expectation. We had expected a reversal in gold, and precisely from 1680 levels, as I told earlier also, last week also, this is a very strong support, and now taking the support, gold is almost rose till towards 1770 levels. Now what is going to happen this week, which position we should take, whether it is going to continue the rise or whether it is going to retrace back on the downside, we will see with the help of candlestick charts and indicators. And in the end I will give you the trading levels for the week. Do not forget to like, share, subscribe and comment. Do not forget to watch till the end. And yes, those who are new, let me share that I update daily analysis on gold, one with the Asia session and one with the US cash session. So twice you get this update. Do not miss to watch those. Definitely it will help in your day trading decisions. Now let's start the analysis. This is the weekly charts on gold, and you can find out. See, it is trying to create this bullish channel. First of all, the support here now at around 1735, which is the previous resistance. Now it is going to be the support here. Now till the time it trades beyond 1735, one can expect that it is going to breach 1800, and this time see 1800 is a very strong resistance zone, and once it breaches 1800 we can expect it to get the next resistance at 1833. Now let me tell you why 1680 acted as a support and why 1800 and 1830 is important. See, let's talk about the 1680 levels first. Once, twice, thrice, 4, 5, 6 and multiple times 1680 gave a very strong support for gold for any downward movement, and this time again it proved out to be a very strong support. And if you look at this, again precisely achieving these levels, now gold trying to retrace and reverse again on the upside. And now if you look at, see, 1800 levels, you can find out it is throughout these multiple weeks, gold traded precisely between 1750, 1760 to 1830 levels. 1830 is the next strong resistance. So when we say 1760 to 1830, 1840, you can find out the pivot is precisely at 1800 levels. So yes, it is trying to, or it may try to attempt and achieve 1800, which is a very strong resistance zone. Hence now be watchful of 1800. Also look at this. This is the long term channel in which it traded for multiple weeks. It tried to breach out couple of times, but now it may try to re-enter or achieve the bottom of this channel at around 1833 and 1833, 1835. If you see here, multiple times gave very strong resistance for gold to either move upwards or downwards on both ways. So be watchful. If it continues to trade above 1800, we can see 1835, 36. If not next week, then next to next week possibly it may try to achieve this. And the next question is whether it should be considered as a retracement or a reversal. So look at this near term chart. If you connect the dots here, you can find out it is still trying to trade in this channel. The highs of this channel again at around 1833, 35. So till the time it trades below 1835, 1850 levels rather, I will say, till the time it trades below 1833, 35, I will not consider this as a reversal. But yes, if it breaks past 1850, we can definitely consider this as reversal. And then I will look forward to 1900, the next resistance zone. And then I will consider that as a sideways move in between 1680 to 1900. Now, if you consider 1680 to 1900 as the sideways movement zone, you can see that almost the pivot is situated at around 1790 or 1800 levels. Hence 1800 is the next strong resistance zone, and then 1833-35 levels will come into picture. But what is going to happen, as I shared, next week till the time it trades below 1735, above 1735 rather, I will say, and we can consider that it can reverse any point of time till 1735. And yes, good long entry, if you see it trading above 1871, can be taken, and then one can expect rather 1771. So once it trades above 1771, possibly till the time it trades above 1771, you can stay long, and then one can expect 1791 and 1800 to provide a next strong resistance. On the downside, be watchful of 1735. Breaking below 1735, again you know the levels that it may get at the next support at 1715, which is a very strong support zone. Also remember, after this reversal, this is the first bullish candle which is almost closed at the top there. Hence there are only two possibilities, that if it opens at high, achieves this, it can swing a bit, and then in between 1800 and 1735 it can trade and then close that at a close at a doji at around 1770 levels, or else continue to trading above 1771. It can try to achieve the levels at 1810, 1820. This is the next possibility that it may try to achieve that. So yes, if it trades above 1771, stay long. That is very, very clear. Now this is solely on the weekly charts. Now look at the daily charts. On the daily charts, see bearish move, retracement, minor retracement again, and then a bullish move here. So three consistent bullish candle, but look at the size of the candle. The bullishness is diminishing here after this, and also three consecutive green candles are done. So probably the bullishness is trying to diminish here, but now till the time next week, if you see it trading above 1760, 1760 is the next support, and 1755 I will take at the next resistance zone. So below 1755 you can stay short, and then one can expect below 1755 it may try to achieve 1745 the next support, and then 1735 level should come into picture. Also look at this on the daily charts. You will find, see, if you connect this, it is trying to achieve the highs of this channel, and if you look at the lows here, the lows there are very well connected. The highs of these channel are at around 1791 to 1800 zone. In between this, definitely it may get a little resistance. Achieving this zone, it can reverse any point of time. So I'll look forward to 1791 and 1800 as the next strong resistance zone there. So yes, you can stay long at 1771, expect it to achieve 1791, 1795, 1800, and then from there we will see how it behaves. Probably it can come down, and then the drop can be sharp enough for it to take it till towards 1730 levels. Closing again at 1760 is possible. Now let's have a look at the monthly candle. On the monthly charts, I told you several times, see, it started the rally from here, achieved the highs, retracement, achieved double top, and it is trying to trade sideways in between this. Be cautious. And the, see, now look at the last 4 months. It is complete red candles out there. It is trying to trade on the monthly charts in this channel. The highs of this channel are also at around 1800, hence be watchful of 1800 and 1810. And yes, if you see it trading beyond this, then 1835 and beyond that a reversal should be considered. Now look at the size of the candle here. The body size is almost less than the 3/4 of, or rather I'll say less than the quarter of this complete candle size, which indicates that bulls failed to take the charge up here and the prices started moving up. Now one thing, if it opens below and takes a sharp drop, then once it drops below 1735, do not consider that it is going to reverse from there. I will consider that probably below 1735 it can come back to 1715, then it is going to be a sharp vertical red candle which might take it on the downside towards 1650, and then it can drop further below 1600 if it continues to trade bearish next month, then and then only on the upside. As I shared, 1800, 1810, yes, next week we can expect that it may try to achieve and attempt and achieve these levels at around 1800. From there, next to next week we see how it behaves there, and possibly achieving the top out there, it can try to reverse again and retrace on the downside. So be cautious there at around 1800, 1810. That is very, very clear. Now look at the 4-hour charts. On the 4-hour chart, look at the 4-hour charts. Consolidation, one big candle, consolidation, another big candle. The candle size is diminishing. Consolidation, third green candle, and you can see the candle size is diminishing here, indicating that the bulls are not there very much. So yes, if you see it trading below 1760 next week, you can go short. Then expect 55, and then it will try to come back to 1745-40 zone. 1740 very strong support, 1735 the next strong support zone. Below this, yes, it may break till towards 1720 and 15 levels. 1715 is the next support. Below that it is going to break heavily on the downside, so do not stay long once it drops below 1735. I will not recommend you to stay long above these levels. So yes, and possibly you can still enjoy the short move. If it drops below 1760, you can take a sell entry, expect it to drop a little, but keep your stop loss at cost, such that in the case of a reversal, as I shared, till the time it trades above 1735, it can reverse any point of time. Hence you have to not only book these 25 points or 15 points, but also keep the stop loss at cost. And if you think that it is going in your direction, you can keep on trading like with the stop loss at cost. So this is one part of it. Also look at this on the 4-hour charts. You can find out it has almost achieved this zone which is the resistance zone, and definitely from here we will see how it behaves, possibly coming back on the downside. 1735-40 level should provide a stronger resistance. Now this is on the charts. Let's have a look with the help of the indicators there. And if you look at the indicators, trading in the top half of the Bollinger Bands there on the 4-hour chart, the support zone definitely at 1740, 1735, very strong. Directional movement is bullish. Stochastic is overbought again here on the 4-hour charts. Also look at the MACD. The MACD is willing to converge. See, the bearish part is very less throughout this move here, and hence it is trading consistently in the bullish zone. Now also it is trying to converge and crossover for a sell. So if it continues to drop, we can expect that it is going to remain bearish for the next few candles. Also remember, the RSI is overbought on the 4-hour charts, indicating that the drop can be seen, or it may start the week with a drop there. Now on the daily charts, also on the daily charts, now see, gold is trading outside the Bollinger Bands, and hence it may get a pullback again on the downside, and you have to be cautious at 1770 levels, 1771 levels. From there possibly we may get a pullback on the downside. Now look at this on the downside. Here you will find that 1725, this is the 20 period moving average. This is going to be a good support, and then 1740. So in between this zone, it is may get a very good support for it to sustain, and then a bounce back can be expected. At the same time, this is the 50 period moving average at 1791. Now look at this. See, 20 period moving average. Now the possibility of it to sustain above these levels is high, that it may try to continue with moderately bullish momentum, and then once it trades below this zone at 1715, definitely the bears will pitch in, and then it is going to be a sell off strongly. Directional movement, if you look at it, was trading bearish throughout this. Now it is trying to converge and crossover. Once it crosses over, possible bullish momentum can be seen. Now look at the stochastic. This is extremely overbought here, sustaining these levels. Possibly it can sustain maybe a day or two, but it has to break, and then this time the break can be sharp enough for it to drop. Now look at the MACD. The MACD is wide, divergent and bullish. It has to achieve a high, and from there the convergence may start, and the RSI is looking upwards again on the daily charts. And similarly on the weekly charts, if you look at on the weekly charts, you will find this is traded at the bottom of the Bollinger Bands, and that is why I said, see, there was a pullback and it is going to rise from here possibly. Now the level support at 1700 is strong, and beyond that you can find 1800, which is a 200 weeks average. Above that we can find 1840, 1835 levels, multiple moving averages coming together here, and this is going to be the next resistance zone. Hence be watchful of 1800, 1810 and then 1833 levels. Look at the divergence here on the directional movement. You can see it is started to converge, and hence the bearishness is diminishing. Now it was at its peak here, now it is diminishing, hence probably we can see a little reversal. Also look at the weekly chart. The stochastic was oversold. Now looking forward to an upward move. Probably it may try to sustain a little rise from here. Look at the MACD, that was extremely oversold for multiple weeks now, and it has seen its peak. It may start to converge from here, so hence a little bullish move on the weekly charts can be expected. RSI is near to bottom now, looking upwards. Similarly on the monthly charts, yes, it has achieved at the bottom of the Bollinger Bands. Try to take the support from there, try to rise from here again. And on the upside, if you look at, see, the 20 months moving average precisely at around 1820 levels should provide a resistance for it to any upward move. Beyond that, it can act a little bit bullish there. Also look at this on the monthly charts for multiple candles. It is traded in a green zone. So the last crossover on the monthly charts was in 2018-19, almost at the end of 2018. It was the crossover. It traded with extreme divergence, and now after multiple months, it is looking forward to a bearish crossover. And a bearish crossover after 4 years is possible, and then it may trade for the month in red, for the month of August in red continuously. Now look at this. The stochastic is almost now at bottom there, and when I say the bottom there, see, it has gone oversold. This was the time last year when it has gone oversold, and this was the time in 2018-19 when it has gone oversold. Now this is after a long time, it is again trying to come back into oversold zone. Be cautious, and it can see a bounce back. Look at the MACD here. It is trading in red. It is divergent. the size is increasing. See, when the bulls were there, it was extremely bullish, and the height of the candles you can see here, while with the bears are not so much bearish, and yes, there is still possibility for it to increase the candle size, and hence a drop for the month of August can be expected. Till the time it trades above 1835, we can expect it to drop again. Look at the slope of the RSI too, it is looking downwards. Considering this, now let me give you the trading levels for next week. First, let's talk about the levels to go long. And yes, before I give you the trading levels, yes, if you want to learn the art of trading smartly, you can join my mentorship batch. The 13th batch is starting on 8th of August. Book your seats now. Only 5 seats left. 15 days, 90 minutes daily. Much of practice, and a lifetime technical support is what you get if you enroll for this batch. So join this, and definitely it will help you become a profitable and a proficient trader. The strategies taught will definitely be helpful to you. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Also, you can be part of my VIP signals group. Reach out to me for more details. So beyond 1771, as you know that 1780 and 1791 is the next target. See, till 1800 it has got its resistance here, 1795 and then 1800. Be watchful till 1800, and beyond that we can expect it to achieve 1810, 1833 levels. So here in between this also 1825 do not miss, and then 1833 and 36 should come into picture. Beyond that it is going to fly high. So in sum, be cautious of these levels. I had told you 1800, 1791 to 1800. If it trades above 1790, 71, yes, you can initiate a long entry, but till the time it trades till 1800 and 1810, in fact till there it can reverse. If not next week, then next to next week. So you have to keep, if you have taken a positional entry, you have to put your stop loss at cost and then only trade if you see it stabilizing at around 1810 levels. And on the downside, you can go short here at 1758 itself. Rather, I will say you can go short at 1755, and then below that you can expect 1745, 1735. Now 1735 should be a very strong support for any downward move. If it sustains below 1735, go short, and then one can expect 1715, 1700 levels to be the next support zone. So yes, if it sustains below 1700, sky is the limit, and then 1680 should come into picture. Below that it is going to crash again, and we can expect it to hit 1650 and below level. So anything is possible. These are markets. I don't see much of a move, and if the move is going to be there, it is going to be largely bullish, or a probable doji can be expected. A broader trading zone between 1735 and 1800 levels can be seen if it continues to trade in fact bullish or in fact sideways. Yes, this zone may be the next trading zone for next week. So trade accordingly, trade profitably, trade with a stop loss, trade with a strict stop loss. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon and do watch the daily analysis. Thank you very much. Have a great profitable trading day. Thank you.